All right, welcome everybody to our closing bell show. This is Eric here. You know me as eRoo, and we've got Max, also known as Trades and Gains or Unusual Markets, depending on what channels you've seen him in. Today we have do this. We've got a little bit of a different type of show today. Usually, what you guys can expect is we will go through what's upcoming in terms of earnings, but you can see it's kind of a dead week this week. We don't have anything, anything major, anything that would move the markets. So what we're going to do instead today is we're going to do a little bit of a different type of show. We're going to give you guys a bit more of an educational show, along with some Stacks AI back testing. We have a couple, not as many prints last month, so I'm going to be doing that live for you guys here today. In terms of stacks, I'll try to pull this up as much as you can. During today, just came in. We see quite a few 0 days to expiration for JPM just come in, so I would not be surprised to see something happen with JP Morgan in terms of news over the next 24 hours. This all expires tomorrow. A quick reminder too, it is July 4th this Friday, so the markets will be closed on Friday. Please plan accordingly. Don't hold on to those swing trades in those situations, because you might be eating 3 days of theta if you're in the wrong type of position. So just a little bit of a warning there for you guys. Quick things too, I want to chat with you guys about. Max has been doing live streams on his side on Twitch. So if you guys are interested, you guys want to have somebody, somebody to buddy up with, I would definitely urge you guys to jump in on Max's channel anytime that he is streaming during the opening, during the market open hours. The last couple weeks too, we've had some pretty awesome call outs. Max will go over them with you guys here in a moment. For example, yesterday we saw some unusual coin calls come in for 382 for next Friday? Yeah, next Friday, July 11th. As of right now, we're looking at those are already over 140% return. So a lot of good call outs, just a little bit of conversation, somebody to hang out with. If you're new to trading, send him your questions. That's what we're here for. We're here to help you guys understand the world of trading, the world of options, and that's what we want to do to help you guys out. If you guys so far are in our live stream right now, go ahead and comment for me, Stacks, S-T-A-X, just so I know you guys are here. And if you guys have any questions or any specific tickers you'd like us to go over today, don't hesitate, drop them down in the chat so that we can get to them at some point, hopefully before market closes, if you guys want to get into those positions or you've been considering them at this point. Let's turn it over to you, Max. What callouts have you had? I know I sent out a beehive earlier today discussing, you had what, TXN, Texas Instruments, you had Intel, Hood, I think, and then Ford as well. But go over though, what kind of returns are you seeing with those?
So let's go into, you can pull up my Discord channel too if you want in the Stacks app.
Let's do that.
So a lot of what I have not been posting as much pattern flow in my Discord as I normally do. And the reason for that is, as Eric is aware, he back tests all of our Stacks AI prints, and what I decided to do was kind of take the unusual prints we see and start back testing some theories about what we're finding with these kind of unusual callouts, we'll call them. So the first one I want to talk about is Texas Instruments. Everybody thought this was a very bearish chart when it was first announced. So when I saw TXN come in,
let me a little bit ago, huh?
Yeah, that was a while ago. And this is one thing you need to understand is when I give call outs, they're never going to pop off right away. Like that's just not the nature of of how I do my stuff. I think the thing is I just look at things from a common sense perspective when it comes to the uncommon callouts. So if we look at like TXN and I pull up that specific contract, it was for 210 calls, but it was an unusual like flow hit. Yeah, so it was on 6/4 is when we hit this, and it was at 11:39 is when it came in. I tweeted probably at like 11:45. This was something I gave out for free on Twitter as well. The average in was 171, but by the time I called it out, it was at like 165, I want to say. Uh, so I just liked it because I just in my head was like, this person is not going to lose 342K on this position. Like I just don't think that plot. Like I don't think they're going to gamble that much with that short of a timeline because usually anything over 250K, you want to typically see it be like a month out for it to be like a solid swing and not like a high conviction gamble. So that's why I took this. It got kicked in the teeth for a good 2 to 3 weeks, if I'm being honest, man. Like I had people bashing me on Twitter and in some of these bigger areas that I post in as well, like Yahoo Finance, and people were just giving me crap for it for weeks. And then we hit 189% at the peak about 2 weeks ago. And then they went back down to about 24% and just sat there for about a week. And then this week we had another explosion with them, where I think the latest return I've had with them was 417%. So that was about $1.68, and they're at about $8 per contract, I want to say, or probably in the high sevens at this point. So essentially, a grand would have made you, if you would have put 1.6K and you make somewhere close to near 10 grand in less than a month.
Yeah, it looks like
And
here was it 5 days after, it was already 100% up, right?
yeah, exactly.
So
And
that
the
was
last,
actually a pretty sweet call out, right?
yeah, so then coin, same thing, dude. It was we hit 139% on coin. This was a rare one for me, if I'm being honest, because it came very quickly. And like I said, not my plays don't typically play out quick. But this was another one where you were gonna get kicked in the teeth for a little bit. But when I looked at the call out, I was like, hey, is this person willing to sacrifice 1.72 million in premiums for something that expires next week? I don't think so. Somebody knows something here. And were these down 10% for the majority of yesterday? Hell yeah, brother, they were. But did they pop off and did we make our money back and some? Yeah, are we still making our money back on these? You bet your ass we are. So it's definitely something where these are sometimes with options, you could do all the TA, you can do all the research, you could have all the news articles line up, but at the end of the day, this is real money. Like this isn't like a hypothetical of like, oh, if someone would have bought 7,980 contracts of coin, they would have gotten this many, this is how much their premium would have cost. This is like real money that people are willing to spend and risk to see some type of return. So when I get into these plays, I'm at the end of the day asking myself, is this something that I think people are willing to risk their money on? Oscar, this is a perfect example of patience pays. Um, that was a tough one to sit in, if I'm being honest. I had a couple of moments where I was like, I think I'm going to cut this. I don't like how it's moving. This isn't great. I put $300 into it. So that got me about 5 contracts with the average that I got in at 0.60. And this was just one of those ones where those call outs came on. Let me pull these up on IC Trades as well. So I bought the Oscar puts for when I saw a $780,000 print come through on the $18 puts for 725. Again, is this person willing to lose $780,000 in the next 2 weeks? I don't think so. Um, Another key signal here is if you, what I saw people also selling calls. Granted, it was earlier in the month, but that when I went back to look, that's what kind of gave me a little relief about holding. Because they were selling calls around 20 to 22, which let me know that 20 to $22 is where they didn't see the stock really surpassing at that point. A lot of time when you see calls being sold around the same strike, it's safe to assume that's the ceiling that the whales are looking for, especially if it's an unusual print or a big money print. So that was another signal that gave me conviction for that, and we saw what happened with that. Those
Well,
went for over.
one thing I want to point out to our viewers here is that if you're on stacks, one of the things that really helps, and I noticed it here, not only for Oscars. Okay, so for example, Max is calling out this one right here. Okay, 13,000 contracts at 0.60. That's the one he got into. All right, they've spent 780K. But one thing that if you're on stacks that gives you additional confluence, additional agreement with that trade is you're seeing all these other additional unusual positions coming in as well. Okay, and it's a great visual. All these blue marks, the blue rows that you see here signal that they're unusual positions. All right, and they're continuing to get into more of them and more of them as you see. And the thing that happened with this position is overnight, as market closed, we see a bunch of people yelling Oscar, Oscar out, and so they had gotten in these areas, and again later at the end of the day, and then we just saw a sell-off overnight yesterday. We saw a huge drop. Was it even really news related? I don't
No, this
know.
was like like I said, this was one of those plays where when people were like, "Oh, what news did you see? What like indicator did you see?" I was like, "I saw someone put $780,000 on a 2 week on a 2 week put." So clearly, like I didn't expect that. I expected that move to happen, but I was expecting that like Monday,
Yeah.
right? Or I was expecting like really realistically from what I was looking at from a levels perspective, Eric, is like if you look where we see that big spike kind of towards close, that big green candle. Yeah, so where we see that no, a
No, that
little
was right
further
after
back.
close. This
So a
is
little
5 minute.
further back.
Yeah.
It's that big green one with the red, right? The two reds right next to it. God, I wish I could point this out a lot easier on
Well,
my.
I had it on the 2 hour chart right there
Oh,
when I
okay.
when I
So on
first
the
looked. That was right after
so
close. Right after close, it had a spike after it dropped significantly, and we're wondering if it was going to hold 18 or not. It's gone even further down since then.
and by the way, if you guys have been diamond handing those like some bosses, you're up 288%. I got out at 249%, so $300 for me. I saw about 1.3K back today. So it made up for my stupid losses and paper handingness that I will say my worst. I had a horrible day yesterday. I was looking at IWM 220 calls, and they were $3 per contract, zero point zero 0.03, and they finished out at $200 per contract. So $300 would have netted you about 20K in the span of about 3 hours yesterday. So,
On the
and
other
I
one,
paper,
the other one that you're also talking about too was the Coinbase one. I really like this one. I jumped in a little bit on it too. But one thing
yeah.
I wanted to point out was on the. Let me switch over to stacks. On stacks, what you'll notice with coin was that it came in alongside. So it's this unusual big money one. So you'll see the big money scrolling in the background of it along with the blue for unusual. But that one came in along with a big money print too, right? Same
Hmm.
time exactly. Two came in together. That's over 5 or 6 mil almost right there. And the unusual one is unusual because it's a bit further out the money, right? So the spot price at 335, they purchased one for 355. We're already looking at, what is it today? 356. That one's already in the money. but the other one is much further out the money, so that one's a little bit cheaper. That one a little bit more of a risk, you can imagine. But as of today, if you're taking a look over at Coinbase, Coinbase had this giant pop ready today. From that entry, you may imagine, Coinbase itself is up about 6%. And one of the things that we want to remind you is if you're not familiar with options, you're not ready to take the risk of options because there is time decay. There's a bit more risk along with it. Some of these, if you just get in on the equity, shoot, take 6% in a day, you're beating what the market's giving you in terms of those types of returns. And there's a lot less risk if you're taking it with your equity instead. But yeah, Coinbase is at 356 already, continuing to go up. That position, if you might imagine, they got in for, again, let's go back right here. They got in on that position for 1.72 mil, right? And they're looking at 100, let's say 140, 130% return on that already. This position's already getting close to what, multiply that by probably 4 mil or so in terms of it right now. That's their 1.7 mil position is looking at over $4 million right now. So, Max always says these people aren't trying to get into this position to watch that money disappear. So, in your case, a lot of us are trading with smaller accounts, following along with what the big money institutions are doing. Can give you that edge, can give you that advantage when it comes to your trading process and to what you're trying to do in terms of your little, your smaller account. So pretty awesome returns right there. What else did you call out over the last couple weeks?
We also had Ford. That was another one. What are those? Those were the
$12.
No, I took a gamble on these, to be honest, because it went against a lot of my rules. But I like Ford. I've always had good success with Ford whenever I've seen kind of like just unusual prints hit with them. I liked how far out we had on these. These were the $12 calls. And we have till November 21st, and it was a $30 premium. Like, who's gonna say no to $30? Like, come on. It's chump change at the end of the day. With Ford, I like what they're doing in terms of their EV sales and that kind of stuff. They've kind of been able to put that at bay by doubling down on other cars and going with the Toyota model, where they're going to start coming out with some hybrid models of their most popular demand cars. So we should see that start taking effect here over the next couple months. And yeah, I like Ford as a stock. This was far out enough for me. This wasn't one where I thought that the volume would just flip to open interest instantly. Because in a lot of these unusual prints, one thing you have to be cognizant of is if you see someone buy 130,000 contracts and there's 5 open interest, you bet your ass that 130,000 is about to turn into the open interest. So Ford, this was a nice 2,000 to 1.4K, which I was like, hey, I like that. That's a nice spread. That means the premiums aren't going to be juiced to the tits where like the ask is at 0.15 and the bid's at 0.30. Like it's not going to be that case whatsoever. So we jumped into it. Again, Ford is a slow mover, dude. Just like Texas Instruments, that thing like moves 5 cents and it's like it did 5% today and you're like, what the hell? Like no. So it's just you got to grind it out and just understand that you're playing with time at that point. And that's why in a lot of these you'll see me say like, hey, time is your best friend in these plays because you might be down 30% for a couple weeks and then you'll just wake up one morning and be like, how the hell am I up 75% without even averaging down or touching this thing at this point? Because mind you, I don't average down on any of my positions. If I do, I'll announce it. But like most of this stuff, like when it's down 35%, yeah, I'm going to sit in that 35% loss because guess what? I still have 6 months to see how this thing plays out.
Mm-hmm.
Um,
Yep. And if
so
you look at
that,
this
yeah,
chart here, Ford is up 12%, almost 13% from where that call out was. So again, like you could play equity. You could play equity
yeah.
if you're not familiar with options, don't want to take that risk. By all means, you do you, all right? But at the end of the day, you said how much was the return for that Ford position?
It's actually still going right now,
Mm-hmm.
but last I checked, I want to say we were at 160%. I'll pull it up right
Yeah,
now.
you pulled it up yesterday and it was already well over 100%. It just shot up even more today, so I'm
Yeah,
guessing
so
that
we're up
position.
we're up 166% on Ford right now.
Yeah.
So yeah, that and yeah, all these are still, by the way, touching those peak levels that um I've called out so far. Like even Oscar's about to touch 300%. So congrats to you diamond handers out there. Because it just jumped up another 50% from where I thought we were going to see some downside and drawback there.
Yeah, still dropping. It's still dropping.
It's,
It's about to break.
it's
It's about to
it's
break further. That's
it's about
next.
this might go 500% if I'm being honest.
Yep.
Even with Texas Instruments, that's at 401% currently. And you're down 15% from your all-time high today, and you still have 2 weeks out to let that thing play. So again, guys, time is your best friend in the options game. I will always look for options with time. You see these JPM prints.
We just called
Yeah,
those
we can
out
pull
when we
those up.
started. Yeah, we called those out right as
Yeah,
we started. JP Morgan. Let's go ahead, pull that up.
that's from Romeo.
Yep. Yeah, look at that. Millions and I will say there's been a lot of talk about the banks rotation, money flowing into them. Maybe we're going to start to see a big rumor that we keep hearing is maybe they will start making those cuts because what is it? What do we have tomorrow? PPI? We got something coming in tomorrow in terms of numbers.
80 non-farm,
Okay, non-farm and
and
NFP.
then ISM.
Okay. And then we have to understand too, as soon as these numbers start looking bad, then the Fed's going to try to do what they can to stimulate the economy. And there has been so many calls for rate cuts, but the big issue has been, we're looking for two things: stable employment and or low unemployment and stable prices. And so if any of those things go out of whack, the Fed's going to have to step in to try to correct those situations and correct those things. And another thing I heard was that Powell mentioned that they probably would have already cut rates if it were not for the tariffs being implemented, because the tariffs did implement a little bit more of inflation into the markets, into our consumer goods, and as a result, they have to wait for that to play out before they can make an educated decision on the new data that comes in. But yeah, JPM, if you're looking at these, the one thing I don't love about these is these are some pretty expensive premiums. We've got over a G for each of them. But in a lot of cases, two things that stick out to me. Number one, they're willing to pay for that. Number two, we have some very extremely short-term expirations. So if I just click on big money right now, look at that. All of this is just all today. We got a lot of 1 day expiration, basically 0 days expiration is what it shows up as when you see these red 0 DTE emojis on the right side. But those all expire tomorrow. They are in the money, so that there is a possibility they might go and exercise these and just purchase those options or purchase that equity once it does expire. 280, it is at 290, so they are in the money. So it's a little bit more of a lower risk type of position, I would say, versus what
Yeah.
we tend to look for. We tend to look for those situations where they're buying well out of the money. They're purchasing a lot of premium, a lot of contracts for something that ultimately is going to give a higher type of return. This position, I would not be surprised for them to see, 20-30% return pretty quickly. And the other side of it is that if it does drop, I do believe that whoever's in this is getting ready to potentially get into the equity of it to play the long term of those positions. So Yep. Those of you that are in the chat, go ahead, comment for us if there's anything else that you want us to go over, any other tickers that you noticed. If you got into any of those positions that we mentioned earlier, please let us know. We would love to hear about what type of returns that you've gotten. If you've been in on Max's live streams, or if you've been listening in on the Discord, and let us know what is it that's helped you, what have you profited off of. Go ahead and let's get this chat going a little bit on the side.
Oh, EWZ was another one, 232%, and that was earlier last week. TLT, Koa.
We saw some TLT prints come in. What was it, yesterday or the day before? We saw quite a few.
Yeah.
TLT, if you guys don't know, let me pull up the chart for you guys. TLT is our 20-year treasury bond. Okay, and we did see it spiked up and it came straight back down. So, if treasury bond, those rates, or the treasury bond value goes up, that's where we're going to see this go. But let me show you guys the bigger picture too. If I look at this chart right here, it's got a bit of an accumulation view. So what we have is we've got this liquidity grab down here where basically we dropped lower, took out everybody down here. And the thing that we want to notice right away is that every time we've visited anywhere close to this lower end, we've spiked straight back up from there. It's getting purchased up. So one thing I do believe here with that position, we probably are looking at them waiting for it to break this downtrend. Once we see that downtrend broken, it probably bounces up from there in due time. The hard part about it is understanding that there's limited time when it comes down to options. Looking at these TLT ones, they've purchased for next week and the week after. So maybe we're going to see some sort of news that pushes this up, pushes TLT up a bit higher, especially because, again, the 30th, we saw quite a few of these buys come in for millions of dollars. So this one, again, a bit of waiting. I think this one's probably down a little bit at this point, but it's definitely something to keep an eye out for. Thing about TLT though is it moves a little slower. I don't see, unless we get some sort of news, maybe with the numbers that come in tomorrow, we'll see some sort of adjustment from the Fed. So I think that's one of those possible plays that comes down to it from there.
TLT, by the way, it is a glacial mover.
It's slow.
It is not something, if you're looking to get in to something that's going to move, I do not suggest getting into TLT. That definitely is for sure. And we just got a question in the Discord about our wolf position. What is our PT in mind for an exit on wolf?
Let me pull that up. So we do our 1K challenge. Our 1K challenge has been moving a bit slower than we expected, but we did get some fairly far dated or longer term contracts, just because with such a small account, we don't want to just blow it right away. We don't want to lose out on all of our premium instantly. But wolf, you'll see here, wolf is, let me make sure. So my long position chart here shows what we're aiming for in terms of it's got toward the $7. How much time we have? It's toward November. And right now we're moving pretty nicely on it. Let me pull up my account to see where it's at so far. We did see quite a bit of a drawback on it. Wolf is now up about 40% right now, 38% in terms of the position. Spiked up to $1.07 from our average of 78 cents. So we're looking at about, right now it says 35% increase. So it's looking pretty good. Our account now is back at $985 when it comes down to our 1K challenge. It's basically made up for all of the loss that we've had for the NU puts that we've gotten into. So for Wolf, I'm expecting this to go a bit higher. That's the thing. And along with what Stacks has to say, Wolf has been seeing continued buys, right? So we even see these $5 unusual calls that just came in 2-3 days ago. All right, we got more purchasing coming in as well. So that's why we like to use stacks. Stacks will give you that continued confidence and confluence of what you're looking at. And remember, we got in on these quite a while ago. We got in on them. Let me click on the buys so you guys can see it. See all this, it's just buying, just buying, just buying. These unusual ones back here. And what was the position exactly that we had? We have the $6 calls for 11.21. So these ones right here. We saw an influx of these all come in at the same time. They got in at about 70 cents. We ended up purchasing at about, I think 78 cents was what I got in on. Some of you guys may have been able to get in on this at a lower cost because it dropped a little bit afterwards. And I think this saw as much as 30%, 40% down drawdown. So if you did average down, you're probably looking at even prettier returns at this point. But like we said, we looked at what stacks had to say, we looked at what our charts had to say, and we continued to stay in on it. And as of right now, we're looking at that 40% return. For those of you, if your palms get sweaty looking at it, if you've gotten in with a lot larger of a premium and you have a bigger position than we do, by all means, take that 30-40% return and run if you'd like to. We will discuss, Max and I will look at the charts. We'll continue to look at what's going on in our in stacks and in our chart, and we'll let you guys know when we do get out of it. But as of right now, I think we're just going to hold strong because we saw such a strong move, and we have continued call buying in these, and we've got all the way until November. So we're probably going to hold on to this for a little bit longer. All right.
Let's see. Anything weird coming through? You got 15 minutes till closing bell. Fun fact, you can still get prints from Investor Central Club 15 minutes going into after closing or anything SPY. Usually you'll see some big golden sweeps for SPY, IWM, and others come through during that time period. So it's always a good time to just see what are the institutions potentially bracing for, especially when it comes to that macro data we're looking at. Mara, we're getting some. This is the second print I've seen for Mara in the last 2 days. For that is unusual for 8:15. So that's been a very common. So clearly,
the other one's even shorter. The other unusual one that came in yesterday was for next Friday.
Yeah, so maybe this is the same person potentially doubling down longer out. That could be the case here. We got some more JPM that came in about 11 minutes ago, some golden sweeps.
Yeah, Mara's popping off right now. It's headed up further so far. So this morning, it's starting to break up past resistance right now. So
I took those Mara unusuals just as a tester to see what they did and made a nice little like 70% on them, and then just kind of sold them because I wasn't willing to sit and watch it, and I didn't really have like a reason to be in them other than I was willing to risk for like 36 bucks. I think the contract was worth. So I bought like 2 of them and it was just like, you know what? Like if I lose it, I lose it. I'm not calling it out. I want to see just what happens to see. Because you have to remember, if there's going to be uncertainty in SPY and in these big indexes, then look for Mara, MSTR, anything that's like Bitcoin or safe haven, quote unquote, related. It's always going to be a good thing to kind of jump into. A big reason for that is just because like, if people are unsure about SPY, they'll go buy Bitcoin proxies because that's they look at that as more stable than what the S&P is going to deliver on a consistent basis.
Also,
so that's definitely one thing.
Gold too. Also, we
Yeah.
most recently saw
GLD.
a lot of GLD, maybe SLV for silver. You'll see a lot of people getting into those the moment that you see uncertainties with the indexes and with where things are going on, on the market.
I will say the SLVs move very slow like TLT. If you're looking for something that's more of a mover, I would definitely look at the GLDs. I mean, we even got some GLDs in for today. We had an unusual for next year in March, 390s. And the averages honestly are not horrible. Like you could buy for March 20th of 2026 and you're looking at $274 per contract for something that you can go sit in for the next. You could easily scale in and out of these longer term positions, by the way. And that's the big appeal of these is like you can take profit and you can re-enter back at levels where you feel comfortable and confident. Um, so that's the other benefit of these long-term positions, guys. You're able to just continue to play the same pattern over each cycle basically and rinse and repeat your money. So if you really, that is one thing to look at when you're looking into GLDs and to these more safe haven assets that play more on a cycle than they do on a technical analysis or chart. Because if you can catch those cycles, that's where those real gains can be made as well.
Yes. One of the ones I want to point out, this just came in today. One of our stacks AI prints, Hood, right? We've seen Robinhood run up quite a bit. They've got a lot of news. I think what they started offering a way for Europeans to purchase American equity. They've got some way in terms of I think they're selling like U.S. stock tokens of some sort. So it's just a way for them to deal with getting more money into Robinhood and offering different products for people to purchase. But we saw $13 million being spent on these hood calls for next January 2026. They're kind of pricey, $15, so 1.5K per contract. But hood is trading right under 100, so definitely a solid target for them to potentially hit as well. And the other one that came in this month, just yesterday, is HIMS. I do believe it's down a little bit at this point. The $90 calls, which is a ridiculous expected move, a $40, so 80% expected move, 1.3 mil, so definitely not as much as that hood position. But HIMS definitely has pulled back ever since, I think they lost their contract with Ozempic, I think was what happened, and that caused a
Mm-hmm.
big drop in it. So,
Yeah.
you know, again, Stacks AI, great hit rate. We'll go over those numbers once we get into the close. But let's continue to peek over at what other things are showing up right now. I want to always bring up our flow scanner. Yeah, go ahead.
I was going to say, well, one thing that we could take a look at. So Patrick Kwan just asked, any news on July 9th deadlines? Could some prints indicate some downtrends? So, well, if you want to look for those prints, I can kind of give a quick update on what's going on with July 9th in terms of expectations. Who do we have deals signed with so far? And market signals and economic effects as well that I have
Is that where
written
the
out because I'm at,
tariffs, right? The tariffs
yeah,
are
take
going to end, or not the tariffs, the tariff pause is going to end on the 9th, right?
Yep, yep. So those April 2nd Liberation Day tariffs, those sweeping reciprocal tariff duties up to 50% on imports were paused on April 9th, set to resume July 9th at 10% baseline plus extra country specific tariffs. Now, as of now, President Trump has no extension plan. So that means on July 9th, he will issue letters. Yes, letters, by the way. He's not emailing them, he's sending letters to these people, specifying tariff levels to countries that haven't reached a deal yet. Now, we did have Besnick come out and he signaled countries negotiating in quote unquote good faith. And some examples of that would be Vietnam and South Korea, which we heard both deals. I believe we heard our deal for Vietnam today. However, they could be given longer on tariff increases due to, with Vietnam specifically, they're linked with Nike, which is one of the biggest shoe companies in America. So far we have agreements signed with the UK, China, but this is limited scope. Example of this would be rare earths. Vietnam, again, as I mentioned, we just had that new deal signed this week. Negotiations are ongoing with the EU currently, with specifically pharmaceuticals, autos, and semiconductors. We also may accept extension or framework plus roadmap India, Trump says a deal is imminent. Tariffs are currently on hold, however. In Japan, there's little optimism. Trump is doubtful that he'll get a deal pushed through before the deadline. Investors are currently shrugging off the looming tariffs, though. As we can see, we just saw SPY hit 620 today because everyone has coined the term taco, which stands for Trump always chickens out. So it looks like people don't have a lot of faith in this. We're getting Fed pushback as well. Powell says tariff-flamed inflation has delayed those rate cuts, as Eric mentioned earlier. And the real world hit. If tariffs do resume, mid-sized U.S. firms could face $82 billion in added costs, likely passed on to us, by the way. So that is one thing to be aware of. And mind you, we're looking at between 10% and 50% for these tariffs that Trump will be imposing as well. So I know today we saw some aggressive SPY put buying to 590 and 560 as well. So I know that we're seeing some aggressive put buying there. I would expect some more downside on IWM as well, because at the end of the day, the mid caps are going to be the ones who feel the real pain of these tariffs once they do pass. So look for some more aggressive, almost rug pull like behavior from IWM here shortly.
PDD and BABA. Let's go over that really quick here. I do feel, I mean, with what my charts have been showing me, at least, all of the Chinese equities are going through an accumulation zone and are nearing the top of that accumulation zone, where you should expect a bit of consolidation before they do move higher. It's been going on for quite a bit at this point. The last time we saw a big push to those higher levels was mostly due to the stimulus being announced for China. We did recently hear about how China and the U.S. did come to a tariff agreement. So that was that didn't push things up nearly as much as I normally would have expected. So maybe a part of that was already priced in. The hard part about China right now, I think it's just a waiting game. Down the line, I do think they will head up higher. But as of right now, for example, PDD, you see a little bit of buying in terms of equities. Not too much. A lot of right now, with the most recent stuff is all puts, but they're not the biggest in terms of sizing. 300K in this, when you've got millions of dollars that can easily be spent, is fairly small on those positions. So maybe a pullback of sorts until we do see that move further. BABA just puts today in terms of that, all aiming for September right now. $100 under $100 is what they're aiming for. But shorter term, we see a little bit of calls. The unusual prints aiming for next year and things like that are all bullish at this point. Overall, you can also see the calls versus puts at the top, still leaning bullish overall, but would not be surprised to see short-term pullback at this point. So I know also Chemo's in quite a bit of Chinese equities, BABA, PDD. So if trust in what he has to say, and when it comes down to his analysis and his knowledge of those. I'm gonna jump into our flow scanner just to remind you guys. So to start off, anytime you jump right into stacks, it is going to filter for the week of. So since Monday till now, we have the big one here is MicroStrategy's getting a lot of calls. So expecting MicroStrategy to potentially move up further, alongside with, you can see we saw Mara just move up, Coinbase just had a pop as well. So a lot of Bitcoin situations are starting to move. Other big ones, like you may see. So here's how I would read this too. So SPY, you can always expect SPY, QQQ, and IWM, because they're the indices, to get some of the biggest flows when they are not the biggest ones. So seeing MicroStrategy up here, makes me lean extremely bullish for MicroStrategy. 168 million calls to less than a million, so less than 500K in the puts. Okay, and that's just this week. So they're positioning themselves for a big move in Bitcoin and MicroStrategy in this next upcoming weeks. SPY here with the 92 million down to 33 million, so they're leaning more puts to calls. Now, I will point out, when you see our indices go up to those all-time highs, this is very natural type of expectation when it comes down to where they're going to position themselves. Anytime you see all-time highs, you have people positioning themselves to hedge those in the case that we see a bigger sell-off or a bigger drop when it comes down to attacking those all-time highs. So seeing SPY do this is fairly natural. Be careful when it comes down to trading this. This doesn't make me say, oh, they're expecting impending doom or a black swan event type of thing. You would definitely see puts head up toward hundreds and hundreds of $1 million if that were the case. So this isn't anything that I would really stick my, raise my eyebrow toward. QQQ here, fairly even, 48 mil to 47 mil, nothing to really look at. NVIDIA, quite bullish in terms of it, 74 mil to 17 mil. But for something like NVIDIA, which is one of the biggest companies out there, this is still kind of small. The thing that does point out to me here is the frequency, 20 of these. So we can click on this contract, and what it'll do is it's going to pull up exactly what they're purchasing. They're aiming for 160 by next Friday, some of these contracts. So if you are looking at NVIDIA, you're expecting another breakout or you expect more news to hit about it, definitely could see that hit those numbers by next week. And here they are spending 1.6 mil. They're sold some of these calls here. This is all selling of those calls, getting out of those positions. But if I were to just filter for the buys of these, you'll see a lot of this being purchased, okay? Back to our flow scanner. Tesla, slightly bearish, nothing major. Hood, quite bullish, 46 mil. This does include that 13 mil position that we just saw as well, with 5 mil inputs, almost 6 mil inputs. IWM, almost a 3-to-1 ratio when it comes puts to calls, but still nothing huge in terms of that. Apple, slightly bullish. GLD, quite bullish. So you can see, like we said, when you see people purchasing more toward the Bitcoin related names, GLD, SLV, you can think that they're expecting, maybe a pullback in the indices. They're getting a little bit, hands are starting to shake a little bit, seeing it hit those all-time highs, expecting to go into something that they feel is going to be a little bit safer, like GLD. This JPM, anytime I see a big fat zero next to it for puts, JPM definitely a position to consider at this point. We're probably going to see some sort of money flow into banks soon, is what I'm expecting with that. If you come back in about a week or two, we'll see if that does play out to be true. Meta, 15 mil to 1 mil. AMD, 10 mil to 5 mil. So that Meta one's definitely looking a little bit more bullish. But just like I said, those bigger names, NVIDIA, Meta, are Magnificent Seven type of companies. Understand that even 15 mil here, not exactly a ton of money when you consider their billions and trillions of market cap that they have. Palantir, fairly even. TLT, this is one that we talked about here, more bullish than bearish. 13 mil to our 250K. Coinbase, we did get into those earlier this week, yesterday. 10 mil to 385K. So what do I like to look for? I like to go here and I like to click on puts and look at what's at zero. So JPM, AXP, AI, SLV, CMG, Chipotle, Snow. But understand too, once we get into these smaller numbers in terms of the millions of puts, just use that to supplement what you already have in terms of your analysis, your technical analysis. Go take a look at those charts if you can. JPM definitely is the one that sticks out to me on that. And it's good to see AXP, American Express, right next to it. So they're expecting credit cards and banks to potentially get money rotated into it soon. One thing to do as well, go into our filter, hit equals, click on today. This is going to filter this just for today. Let's go ahead and filter it just for overall. Again, SPY, more puts to calls, definitely more bearish right now. Like I said, as we hit those all-time highs, that's expected. Hood, JPM, so those are the ones that stick out. You see how MicroStrategy drops down over here, meaning that they took those calls a bit earlier in the week. And we did see Coin, MicroStrategy, Mara, those ones pop up off, so those might be looking at some profits already. Somebody mentioned Go Wolf. Let's take a look at Wolf real quick.
Oh yeah, we're up 49%.
Yeah, trying to break $5 is what we're looking at here. But with this type of a move, probably can expect it to go up a little bit more in time. We're not seeing a huge spike of a sell-off just yet. So, yeah, hit $5 again. Let's see it go up further and further.
And by the way, one thing you can always look at in a flow scanner as well is if you look at the most popular contracts, look at when the earliest contract was bought, and then look at when the latest one is bought, and look at what the difference in the average was. Because it's going to show you the same strike, the same price, and the same expiration date. So you'll be able, like, for example, if you look at QQQ, you can see if you bought the most popular contract from QQQ this morning, someone bought in at 10:25 a.m. for the 550 calls at $1.83, and then we see at 3:01 p.m. that someone bought 272K worth at a $4 average for that same contract. So if you would have followed that initial call out of QQQ and you go, hey, I'm going to buy anything over 150K on this, you would have had a nice almost no, you would have had an over 100% return by end of your session by just kind of following the flow and sitting on your hands.
Yep.
And seeing those frequent contracts hit over and over again. So when it comes to Flow Scanner, the premiums give you the story of like how people are leaning, but then the most popular contracts can show you kind of the conviction that people have in the long term, short term, or whatever the case might be when you're looking at what was the most frequently hit contract and what has that thing been moving like in terms of premiums. So that's just one thing that's I've always reviewed with Flow Scanner that I've started to look at as well.
Yeah, I like that. I like that. Very good.
Yeah.
Look at these Hood ones from 2 days ago. $1.80. If you look at Hood right now, that same contract is trading over $6. So they made a pretty penny on that one. Pretty awesome. Pretty awesome. I like that. Always trying to share little things in terms of, tips and tricks of how we can use stacks to our advantage. And one of the things I will point out, Max and I are still finding new things in this software as we continue to use it that, we're hoping we'll be able to share with you guys so that, when you guys are using the software, you guys are trying to profit from it as well. There are additional tips, additional tools that you can use to your advantage.
So we did have Soba just ask anything unusual you guys are seeing today for a holiday swing. So a couple things about the because I put out in my chat earlier, I was like, hey, who wants to find a holiday swing on stream tomorrow? Okay, so first things first, tomorrow we will have Milky Filky from the FU Money Club joining us on stream tomorrow for Fast Money Thursdays. To be honest, her plays typically, to get into them, it takes her about less than an hour to get into a full position of something. Then she kind of just lets it ride and we'll give you levels throughout the day. We'll voice channel so you guys will have full transparency because she is a 0-day trader. It's not really our style necessarily, but at the end of the day, she kills it. Go look at her Twitter account. She has, as they would say, the proof is in the pudding, and her pudding's all over the timeline, to say the least. So it's definitely, but in terms of our holiday swing, once we kind of conclude and we get into that IWM position, I will be tracking flow throughout the day on stream, not only for you guys to have the opportunity to point stuff out to me, but so when I do find those swings, we can go ahead. Oh my God, look at this IWM barrage of puts, by the way, Eric. Pretty crazy. I will find those swings that we can hop into for tomorrow. And ideally, I want to find something that we can play in for about a month to 6 weeks. That would be my comfortable time frame because that allows us, if we don't open how we want to open on Monday, potentially we still have that month to recover and still see some gains and let you guys average down. And holy crap, IWM is just getting blasted in the face with 210 puts for 718 and 815. Wow. That's a lot.
Yeah.
We had an 815 wall built, lowest premium at 127,000. Jesus. So jobs coming in cold tomorrow, or coming in, coming in cold. We ideally want jobs to come in hot, because then that will push the Fed to cut rates. Nope.
Yeah, I would say if you guys tomorrow, if you guys are free, make sure you join Max on his live stream. I'll jump in there as well, probably halfway through the day or so. And we're always just having a conversation. So for example, last week we were looking at Nike, we were looking at yesterday we were looking at Coinbase. As things come in, we'll make those call outs. If you are in our Discord, keep your notifications on for Max's channel. He does his best to try to get his notifications and his call outs into his channel as soon as they do happen. But we'll have our conversation and try to see what comes in. It's hard to tell exactly what's going to happen right away.
Yeah.
As of right now, nothing exactly sticks out too much. But I will also point out too, it's common when it comes down to these 3-day weekends, you will see some bit of a sell-off, right, not necessarily right before close, throughout the day probably. You may see some equities selling off, and you want to always compare how certain tickers are doing to the broader market. So if a specific ticker is still inching its way up or really not selling off, but you see SPY sell off pretty heavily, you can see that there's a bit of strength in those positions. Or if you see SPY going up while a certain ticker is going down, it's the opposite obviously happening there. But one thing that does happen, a lot of people try to get out of positions before these long weekends because, number one, if it is an out of the money type of position, you will see a bit more of theta decay. You'll see those 3 days immediately tick off of your premium by Monday unless you see that type of move happen overnight and over the weekend. And a lot of people, it's a lot of headspace when you're in these positions. Some people can't enjoy their vacations, can't enjoy their weekends when they're still in a position, especially when it is for a significant amount of money. So you may see people get out of those and then try to reposition themselves for the upcoming week once Monday does come. So just keep that in mind. It is something that I've noticed, something that does happen with these markets, especially before these long weekends hit.
Yeah, that's the one thing I am nervous about. That's why I was saying like we want to find something that's like ideally a month to 6 weeks out, just because I want that like 2 week recovery. Because really we'll need a 2 week recovery period if we do need to recover, if we're being honest. And then just keeping a track on that open interest. Again, we're going to be looking for, if you guys want to help in the search, we're looking for volume and open interest to be almost similar. but we're not looking for something where someone bought 10,000 contracts on something that we have one open interest on. That's something where we potentially will get burned because I have gotten burned on those unusuals where that shows up.
A quick note
Yeah.
too. That MicroStrategy position that came in yesterday,
Yeah. How much is that up?
142 mil. They bought 34,000 contracts at 4K each. Man, this guy's got some money.
That has to be that's just Michael Saylor.
Yeah, that's just him
That's
buying.
just Michael Saylor pumping up the volume on his own options contracts. He's like, come on, man. What's his name wants to short you guys into oblivion. Let me take you guys to heaven. The guy from PLTR who's always like, I'm gonna make you shorts like eat your contracts. I feel like Michael Saylor is the polar opposite of him, where he's like, come on, let's do some shady stuff together so we can all make money.
Here's one to look into for tomorrow. CMG, so Chipotle Mexican Grill,
Ooh.
for Friday next week. Strike $59. It's sitting at 57 right now. But just because you're talking about it, I don't usually do this, but this is something to consider. I just filtered for volume, right? Filter for volume, hide the ETFs, look for just the buys, filter for the just this week because that's the most recent. And you see they spent just under 800K for these 31-cent contracts by next Friday.
How do you feel about Chipotle, Eric?
I love Chipotle. I love when I was growing up playing basketball, we used to go and that was
Oh
that was my
yeah.
meal before basketball games because you could get 1,000 calories in. It's clean
Mhm.
food. There's NBA players that talk about how it's their nutritionists say they have to get like a grain, a veggie, a meat, whatever, and protein. And a lot of them go and they fill up on Chipotle. They get two burritos or two burrito bowls at once, and that's a great meal to have. Now, obviously, the company's done great over time. The thing is that they've had every now and then they have what their um, their food gets contaminated. There's a lot of bad press against them.
Yeah.
A lot of times, most recently, that you may have heard of is how they're being a lot more careful about how they portion out their sizes, things like that. But the company itself, it's well structured. You can also imagine there's a lot of these other companies out there that are doing their best to try to imitate them. So you see Kava
Mhm.
doing a Mediterranean version of it. You see Blaze Pizza, which LeBron James is a big investor in as well. And Blaze Pizza does a very similar type of thing where, it's a cafeteria style setup
Build the
for
pizza.
food, and you get to choose what you want. They're not too stingy about their ingredients because they know they've got decent margins on it. So, Chipotle, great company. I think overall, they've done quite a few stock splits as time has gone on. But that one, just because of the sheer volume of that position, is something to consider. And here as well, you see, here let's just click on CMG. We see if I filter by, why is this all?
Yeah, I've always been interested. Like, how do you like investing in like those types of companies where it's more, I guess, consumer based, we could call it, where like if people aren't buying as much Chipotle, the stock might not be as much as what you would think based on initiatives, et cetera, right? I've always been interested to see how people trade that consumer because I trade mainly tech. That's
Yep.
like my specialty if I had to boil it down to one. What would you say kind of like more so your specialty or like what kind of sectors do you enjoy?
I definitely lean toward tech, being from the Bay Area and having roots there. But I look more so of, how do I explain it? More of like the relative value of what's being shown, especially on something like stacks. So one
Hmm.
of the couple of ones that stick out to me, um, Peloton was one example. Not
Okay.
it's partly a tech company, but the other
Yeah.
thing was I noticed at one point when it was trading at its like all-time lows, where people were purchasing leaps, and because it's such a cheap stock, you could get leaps of Peloton for pennies on the dollar. Okay, so
Hmm.
it was like 30 cents per contract for you to get something that was a year plus out, and they were spending millions of dollars on that type of position. So it's more of the relative value of what you can get when it comes down to finding these types of positions and plays. Because if you are looking for those bigger returns, those 100% plus returns, that's where you got to look at it for. Same
Yeah.
with like Palantir. I was just looking back on it. I have on one of my watch lists for Robinhood. I have a Palantir position that I got into back when it was trading like at $10 or something like that, 10
Hmm.
15 bucks. And it was a leap for Palantir well outside. And the crazy thing is I purchased it, it was like $3.30, so $330 for that position, and I cashed out at 100%. I'm looking at it right now, and that position is actually at 10K.
Jesus.
Yeah, so it's like a 3,500% return, and multiplied that position by 35. All right, so the thing is, yes, when you're looking at fundamentals, right? So what you do a great job at, especially, is the data side of it and understanding, their earnings reports, what their outlook looks like, their revenue and things like that. But there are certain times, especially with these markets, where a lot of that gets thrown out the window for a little bit. And what the big money does is they're just trying to pump it. They're just trying to throw money into it, push it well past expectations. PE ratios go out the window. Um, and ultimately it's just money flowing, right? I always look at it as there's a group of guys with their billions of dollars, and they sit behind, they have their fancy dinner, and they're having their conversations about, all right, we're just gonna pump Palantir right now, and get as much money into it, right, until we decide that we're gonna start taking our profits from it. And that's a big part of what also Wyckoff and Wyckoff analysis talks about is there are these campaigns that are being put on to, they did it with like Tesla, push Tesla to the top of the charts. They've done it with Meta, things like that, where they take these companies and they just pump money into it over and over and over again. And then once it does hit all-time highs, and they have their dinner again, and they decide, what, we're going to pull some money out of it now, take our profits, and then we're going to move on to the next one, right? And so it happens with a lot of companies. And what you're looking for are the companies that have a strong foundation. One
Hmm.
of the ones also right now that sticks out to my mind would be Carvana. Carvana was trading at like $3 just like last year or something like that. Let me pull up the chart. Carvana.
I feel like we need to make an Eric's watch list of just like long-term companies that we go and look back at every 2, 3 months. And we can, but the cool thing is by having the watch list, then we can have like alerts set from Investor Central Club. So if we ever see anything unusual or big money go into it, we can it kind of perks the antennas up as the government would say. Um, but I
Yeah,
think that would
this
be kind
one,
of a fun thing to
right?
do too.
Carvana,
Yeah.
Carvana, crazy. Went through full distribution. Well, I've shown you guys the chart before, the market psychology, market cycle, where you pump it up, drop it back down, buy more at the lows, pump it back up again. One of the things I want to point your eyes out to is this volume down here. So you can definitely expect that down here when it's trading under $10, the big money interests did their best to gather as many shares as they can. So imagine they purchased it down here at, let's just say, went as low as like three bucks here. Purchased as much as they can, went through Wyckoff accumulation, pumped it up higher. Right now, we're possibly still seeing it go higher. So I don't see full sell off at this point for Carvana. I would not be surprised to see it break above this 350 level, because we went through reaccumulation here, and we have not seen a buying climax show up for Carvana just yet, right? So, I'm still a student of Wyckoff and Wyckoff charts, but it's something that when I was learning about the stock market and learning about these market cycles, that it really stuck out to me because, to a certain extent, he was considered the Robin Hood of stock market and stock market education.
Mm,
His entire premise was built upon teaching the people how they were getting, getting fleeced out of their money. That was the words they used.
yeah.
Get how big money and big money interests, because they can hold out longer, because they're going to look at, the losses, and they're just kind of brush it to the side because they know down the line, right? They might be looking at, let's say from here, they might be looking at a 90% loss on their money right away, but down the line, they're going to see it pump up 84th, 100%, or even from where they purchased at those highs, still a 500% return of what they've gotten into. So, companies like this, Carvana, um, a firm, I think, is going through something similar too, where we have this accumulation phase, last points of supply, especially with what buy now pay later type of services becoming more and more
Yeah.
more
For-
accepted and used by the new generations. Uh, Roblox
So,
is another one where, dude, I had this charted out down here with the accumulation zone, and right now,
mhm.
from Roblox's lows, you're looking at this at almost 2.5x return on that as well. So, a lot of
What do you
these.
think?
Mhm.
I was gonna say, what do you think about SoFi? Because we've seen some big money prints come in for very opposite directions, and then
Yeah.
we've seen some like repeat hits in some opposite directions as well. I will be transparent. I made 25% on my big money SoFi call out and kind of got out just because I wasn't really feeling the movement of it.
Yeah.
I would be up like it would go from like down $10 to all of a sudden I'd be up $38 to down to 50. And I was just like, this is too wonky for me. And honestly, it was for January 16th, 2026 expiration. Again, time was my friend in that, but just kind of interested to hear what your thoughts are in regards to SoFi and how you're looking at that with stacks and just the Wyckoff method and kind of how you, because you're much better with like charting and stuff than I am. So like, I'm always
So
interested to get the
I
technical.
definitely see the Wyckoff accumulation. Another thing that you'll notice with a lot of newer companies is right as soon as they come, they have their IPO, they shoot up like crazy and then they sell off very quick as well. That type of distribution. So the big money takes advantage of all that hype and everybody talking about it. And you can see this. This happened with Palantir as well. Right off the bat, people got into Palantir. They lost out very quickly. Saw a ton of their money gone, and then big money does their job over time to quietly accumulate over the course of 1 to 2 years, sometimes even more, before they see it start to shoot up again. So, especially right now with SoFi, right, dude? SoFi was a $10 stock not too long ago, and we already
Yeah.
see it pumping up over here, headed up toward higher values. Another thing that also
Mm,
sticks out is there's something called the Elliott wave analysis, which
hmm.
talks about how when something moves in a direction, it moves in these waves where you have it pump up on wave 1, 3, and 5, and you have consolidation and selling off in waves 2 and 4. So
Yeah.
this also exists when it comes down to something like our accumulation zones and something like our Wyckoff, is that you'll see a pump up, a sell off, another pump up, another sell off, and then you'll see it go up to another higher level. And it takes these 5 wave movements. And there are ways along with the mathematics of it as well. There's this thing where we use the golden ratio. So the golden
Hmm.
ratio that we can use and measure one of the moves and then use that to dictate what the next upcoming move might potentially look like. So the exact same
Okay.
move from these lower ends, The exact same move, you'll see SoFi at $21 is kind of what the expectation of it to hit is. As long as it breaks
Yeah.
this most recent drop, it retraced 78% is what this is saying. So it went up one full movement and came back 78% of it before it went up further, before it, goes back up.
Oh, okay.
Okay. And it's the idea of the expansion of, the golden ratio, expansion of numbers. When you take a look at nature, the way that some trees and some plants, how they grow, how they expand, it's the way that the numbers and the way that the space around it allows the leaves to grow and things like that. It's the way that when you have ripples in the ocean and ripples in water, how they space out and those waves move out. And it has a lot to do with human behavior too, because human behavior looks for these types of percentage returns and these percentage numbers. And so one of the good possibilities for SoFi is down the line, we could see it hit these 24.10 and 28.88, and you can imagine that's right above where previous all-time highs are right now. So seeing SoFi potentially make those moves, yeah. The only thing is it can still pull back. It could take time, but in
Yeah.
terms of it, SoFi as a company, I see ads for SoFi all the time trying to get me to convert to using their bank. I'm starting to hear about people trading through SoFi and using their services and things like that. So down the line, yeah, people, especially nowadays, I look at it too as, yeah, I've got, Chase Bank and Bank of America and, those traditional brick and mortar banks that we use, but a lot of people have moved to things where they only have to deal with things online. And so SoFi offers a lot of variety of products, loans, and things that traditional banks do, but they're doing it in a manner that tailors more to the new generation. And the kids nowadays don't want to go out to the bank and go open up their account there. They just want to deal with everything through their email and online. So that does push a funnel of new customers and money into the bank of SoFi as well. So, they're a financial tech company. So things
I have
like
a
that.
SoFi bank account
Yeah.
and I have a SoFi trading account, and I use it for like cheap. Like I bought Snap really low earlier this year, and I use my SoFi account to just buy it because it's very, very, very limited in what you can do from an options perspective. It's not going to be like a Robinhood. So I was just kind of like, I'm going to use this to just, buy shares of stuff I think is cool and see what happens. So
Yeah, if you
it's
look
a
look
really
back
cool
on that
platform.
look back on that SoFi chart that I just showed you, you had the IPO. This is Palantir. IPO popped off like crazy. People
Yeah.
sold off near the all-time highs, or big money did. Then you have this giant accumulation zone, right? So I had this charted out with Palantir as well. And like I told you, I got in down here with some of those leaps at really, really cheap. The ones that I told you, $300 for those leaps for 2026, 2027. And then ultimately we saw it pop off. So you can imagine right now, we might be looking at SoFi. SoFi could be somewhere like right here, where it's got that V shape and it's coming back up. We could see it go up a little bit higher, come back, consolidate more, and go up higher. It could be up over here, for all I know, or it could even be getting ready to break out, right? But if you have time for your SoFi, like if you were to be able to buy equity, that'd be the safest version of it. Buy equity for SoFi. Who knows down the line if it moves something like Palantir here? Look at this. Look at this. Just kept moving up, kept moving up, kept moving
Yeah.
up.
Just
Right?
melted up slowly.
Right. Now, from those lows, it's kind of hard to see from here, but if I just grab some from right there, right, 19x return. Okay, and that's just equity, right?
Yep.
Put in a G, that's 20 G's right now. All right, put in
Hmm.
100, put in 100K, that's 2 mil right now. So, but again, part of trading, people, it's not just skill. Part of it has to come down to your luck as well, unless you do have the inside knowledge of it. But what I do believe here is being understanding your psychology and understanding the psychology of the markets gives you a great advantage to it, because down the line, a lot of these companies, as long as they continue to make more money, continue to bring in that revenue, they're under a solid stewardship, meaning, you know, the captain of the boat, the CEO, the people and their board of directors are doing their best to try to make the company make as much money as possible. Down the line, you'll see companies do this type of move. One thing that also brings me back to is, you got to go way back on this, but this is Boeing. Boeing as a company has gone through quite a bit. Let me just hide my charts for a sec. But if you go back to the very beginning of Boeing, okay, so this is all the way back. I was like, that's not the beginning. The beginning of Boeing, you'll see the little dinosaur at the bottom back here. The beginning of Boeing, and let's reset it right here. Beginning of Boeing, 1968. And what's that back here that you see in terms of this chart shape? That's Wyckoff accumulation right there. Okay, they pushed Boeing down to 13 cents. All right, 13 cents.
Jesus.
Went up to these highs, and like I said, what if SoFi right now, you know, SoFi, we talked about how it dropped and came back up. So it could be at any of these points where it dropped and went back up, dropped and went back up, V-shaped drop, come back up. So what if SoFi is near this point right here, getting ready to go up higher? All right, and here this is the beginning of Boeing. Boeing here trading at $2.64, and that's all-time highs for it back then. But as time goes on, as the company continues to make more money, continues to expand, continues to grow, now we're looking at Boeing down here, and Boeing now is a $200 company when you consider it. So Wyckoff accumulation, market cycles, you can always bet that it's going to go through. And especially when people are the most fearful, you know, like Warren Buffett says, be fearful when others are greedy, be greedy when others are fearful. That's a big part of this type of movement when it comes down to it. So
yeah,
Wyckoff, there are a couple of I post them all over our Discord. It's not only in my channel but on the education channel as well. Wyckoff has a couple of PDFs that you can find online that discuss what you're looking for, not only the chart shape but also looking at volume and trying to decipher whether or not big money interests are actually purchasing at those levels and trying to get in. And those can be indicators and help you make those more educated decisions as to whether or not the stock is going up or down. But that's part of what we've got for. So like I said, SoFi's a good one. Roblox is a good one. Oh, let's pull up Baba. Alibaba, I do believe at this point has gone through that type of accumulation zone as well. And we're just waiting for due time for this to head further up. So if you go over, I have it charted out here. Chinese equities have that look to it. Baba, FXI, accumulation zone, PDD. One of the things that I have a bit of confidence in with these is that you see the volume spikes when it hits these bottoms of it, meaning that they're purchasing to push it up higher. So let's look at Baba right here. Baba, we got the volume spike to push it up, volume spike at the bottom here, volume spike, we're seeing continued purchasing of it, so that down the line as price goes up further, these, you know, they've accumulated quite a bit. And you got to understand, Alibaba's platform, it's used all over the world at this point. It's a giant company. It makes plenty of money. Tariffs might have affected it with the U.S., but understand the U.S. is not the only company, or not the only country purchasing from Alibaba, and China has done a great job of maximizing their trade routes and maximizing their trade not just to the U.S. but to everywhere else along the world as well. So definitely would, you know, come back in 2026, 2027. We'll see where this chart is. I would not be surprised to see it at the 150 plus levels. If you guys are still around, comment stacks in our chat for me, or stacks AI. Let's do that. We got to jump into that. The whole thing with today, I know we went off a little bit on a tangent here talking about Wyckoff, but I know a lot of you guys want to see what's going on with Stacks AI. Okay, so Stacks AI, one of our favorite filters, one of our favorite ways to find what's going on. I've just started to do this. All I did so far was put in the new prints that came in. So you guys are going to go and sit through a little bit of this with me if you guys want. Get an idea of what's going on with our upcoming prints here. What Max is going to do as I go through them is he's going to see if he can find any sort of news on any of these. And as we go back as well, we'll try to take a look at the last month or two and get not only an update on these, but also get an idea of if there was news that pushed it up higher. Because what I will say is my theory, I've been doing this back testing for a year and a half, a little bit over that now. And my theory is that Stacks AI is going to pick out the most unusual, high premium type of positions that really make you raise an eyebrow. It's the type of thing that nobody should ever be purchasing those options in terms of that strike and that expiration unless they've got some sort of inside knowledge as to what potentially could happen with it. A lot of what I've noticed with these is that within 1 to 3 months usually you'll get some sort of news that's going to push it up higher. The big ones that Palantir with their contracts, we have a lot of energy names that pushed up because they got new contracts or new partnerships with people. A lot of these, I wish I did a better job from the beginning, just linking news articles to when they happened. But ultimately, if it's not something linked to earnings, it's generally linked to just some sort of catalyst news that ends up pushing these up higher. So one of the things I do, so every month, we're going to go over last month's prints. I've got them right here. We got ARKK, FSLR, LEU, Riot, PDD, and Meta. And here, let's actually make this even bigger for you guys. On the left side here, what Google Finance does for me is it pulls up, something's wrong with this ARKK one. It's pulling up the wrong ticker here. But we have the spot price at which they purchased at. And then we have, I'll fix this later. We have whether or not that equity's moved up or down from there. So I usually, when I do my update, I'll take the ones that went down, put them in red. But you can see PDD is up 3% from where they got in. Riot's up 27% from where they got in. Is that right? Riot's up that much?
I mean, I think it got some pretty big bullish flow over the last week.
That one's wrong. Riot's at 1220. Something's wrong with the way Google's pulling this up. Oh, no, it is. That's right. I mean, they got in at $10. It's up to $2.20. So, yeah, it is up 27% for that. LEU, this one's a big hitter. We'll talk about that in a moment. FSLR. And Meta here is down a little bit. But one of the things you always want to keep an eye out for example, these two right here, if I put in yellow, these two are not going to expire till 2027. So they purchased for far, far out. Okay? And with their strikes of what they're looking at. And the expected move is something that we want to consider. It's not just what strike they purchased at. It's the percentage expected move from where they got in at. All right? So what I do here is these all have their contract price that are given to us by Stacks. I go into these, I have to do manually, but I go into Google Finance and I can go ahead and I can pull them up. So for example, this ARKK position, they got in at $1.80. $1.80. This one's already trading at $5.12. Okay. Now what I also will go do is we're gonna pull up the bigger chart of it, and you can see they got in on this on the 3rd, so about a month ago now. And you'll see that big volume spike on this right away. Now what we're going to do is we're going to take a look at, if that was the volume spike, they purchased 10,000 contracts. This 5,000 contracts is very unlikely that they've fully gotten out, or if they even did get out. Okay. If we take a peek over here at this open interest at 15K, very likely they're still in that position. What I'm going to do here is I'm going to go find the highs. So here you can see the high, $5.55, $5.35, $5.12. So $5.55 was the high, but the volume's 93, so very unlikely they're even out of this position. So let's go ahead and go put that in here. We're going to go in here, say $5.55 for the highs. I'm going to go ahead and copy over. And we're going to say the date of that high here was 6/24. 6/24. All right. Then what we can do is we're going to show us, took us 16 days to get to the high. This one's definitely a W because it is above 15%. All right. If it's above 15%, that's where we put our threshold for these. So ARKK, great start off to that month. Last month of June. Already a 208% return on that position. That's the XA I called out for us, guys. All right, next one, FSLR. FSLR itself, they got in at 162. Now it's already trading at 170, so we can expect that 5% move for it to very likely already be up. They purchased each option at $7.10. Oh, okay, it is down. All right, we'll take a quick look at this right now. They got in back here. So the highs of them, they did already make some money. So $10.15. But there was no volume on that. However, it is the high that was traded. All right. We got to take a look. There were some lower ones. So yeah, 10.15. We do not see any volume over here. Right. 4.28K. Let's take a look at their volume. They purchased 3,000 of those contracts. So it's very likely they're still in that position. So $10.15. That was one thing, though, we will have to understand. For those, when it says volume of 0, it means that nothing was traded those, even though it had those highs and lows. So you could even consider that, hey, the previous high, maybe $8.50. Or if we go back here, right, it's dropped quite a bit from that point. So they got in $7.10. I normally would put this at 10.15, but because the volume says 0, we got to go back here. We got to look at here. So $8.50. Volume of 4, but again, something was traded. So $8.50. 19% return, right? If it was that $10.15, we're looking at a 42% return. Okay. However, we'll go with this because that's where the volume shows. Let's go back in here real quick and see that is on the 11th. So we're going to change this to the 11th. That's 5 days till we hit that high. Still a chance they're in there. I will eventually add some additional indicators on the side for us to say, hey, they're probably still in that position. This one, probably a bit bigger, LEU. All right, got in at $149 at that spot. That is already up 18% from when it was called out on the 9th. They purchased, this one's a bit pricier, $28.50. So $2,850 for each position. Look at that. 41.30. Let's go look at a bigger picture of it. You can see that's where they got in. 1,157 is the volume. So if I go back here and peek at that, yep, they purchased 700 of that. Let's go take a look at our open interest. Open interest still at 995. So there's a chance they're still in. They might have sold off little bits and pieces along the way. Let's take a look at the highs. Highs 65 volume, but 68.30, 64.17. So we're going to go with this one, 620, 68.30. The date was the 20th, so we're at that on there. So let's see. Oop. The return 139% on that position already. Okay. Let's continue. Riot. Close these real quick. 265. What did they get in a 1.5? Okay. Pull out a little bit further to see. Okay, that's the most recent one. That's the highs that we see just of today. Open interest at 14K. You can see these volume spikes. Oh, my thing's tripping out right here. Well, this volume spike right here. Let's come back to it. There we go. Volume spike right here. 41,000 is probably where they got in. Might have sold off right here. Okay, so 20,000, 20,000. So this is one where you got to understand if that is the 40,000 contracts that they purchased, it's probably that they've already gotten out. Okay, you see that they got out here at 1.8, 1.9 probably is the range. Okay, however, we still hold on to it and we still consider it's still an active contract. 2.65. It doesn't show us any volume for today, but that is the highs that we're at. And again, with tomorrow's market open, this could potentially go even higher. So 2.65. And we're going to go and say this is for today. Okay. So 12 days. Not bad. PDD. Only up 3% from where they got in. Expirations for 2026. They've got a lot of time. $7.15. $7.14 as of today. But something to consider. They got in over here on the 20th. We had this giant spike. High of 960. 22 is that volume. So I'm going to use that one. 960. Doesn't look like they've gotten out. That open interest still at 3.67K. So they're probably still holding on, waiting for more gains to come. Just a bit of a pullback from this pop. So 9.6 on the 24th. That's 3 days for it to get a 34% return. All right. So far, everything has been a win. We can also see that on the left here with the spot prices. We're going to expect that this Meta one, unless we saw Meta go up higher earlier in the week. Meta on the 27th, this barely has had any time. I will point that one out. 1190 as of today. They got in at 14. Let's see if it went any higher over the course of the last few days. Okay. Well, there was a volume bar that just disappeared. 6.79K in terms of the volume or open interest right now. Oh, hold on. Let's go further back. Okay, there we go. This is where they got in. Might have gotten out a part of their position. We'll see. The highs on the 30th were 15.4. We've dropped back down now. So this technically, with what Stacks is showing, this technically is a win. Okay, 14.2 went up to 15.4 on the 30th. 15.4 on the 30th. So that type of return, 9%. I'm not calling that a win. Our threshold for these is considered to be at 15%. So out of our 6 prints from last month, we have 5 out of 6. Let's go ahead and write that down. I'm going to copy this over. And we'll calculate that here. So we got 5 out of 6. 5 out of 6. So 83% win rate. We're going to add together our percentage returns. Divide that by the total number of prints that we had. So that's an 81% return for last month. And I will point out, and I always talk about this, the last couple days of the month, right? So for last month, it would probably be these 3, Tesla, MRK, Carvana. You'll look back on all of my back tests. That last couple days, right before the month is over, those prints tend to take a bit more time. You got to give them some time. You got to give them at least a week or two, really, for them to, you know, let them marinate a little bit, like I like to say. So Meta, you could put an asterisk next to this one. Consider this 5 out of 5. take away that return, even if you'd like to. If I did from PDD down to ARKK and I said 5 out of 5, it would be 100% hit rate with 95.73% return. Okay, just so you know. But we're going to use these numbers for this month. Our hit rate being 83%. We've got one. In the very beginning, this first one would be considered a win just because it's in positive. But we've had enough of our users tell us, we don't really look for returns until they're past 15%. So we got to kind of understand, that type of return isn't always going to be considered a win in our, with what our strategies happen to be. Okay. So just so you guys get an idea, I want to do this with you guys today during our live stream, so you guys get an idea of how I'm doing our calculations for our back tests. What it looks like when I do this. It just happened to be a month where we only got 6 prints, but you got to understand, give me a little bit of time. I will go through all the rest of these. So for example, last month we had 23 prints. I'm going through these all manually, one by one, checking each one of these one by one. All right. If you happen to know a way where I can get all of this information done and automated for us, please let me know. I'm happy to pick your brain. If you're more, more well versed when it comes down to spreadsheets and coding and things like that. That's not my, not my expertise, but I've got this giant spreadsheet that I got to go through and analyze every single month. Over time, just from last month, I will give you guys this here. See, all these over here. Over the last months, we've had, oh, this is off now. What was my hit rate over 100%? Oh, it's because I added these here. Let's update this. Something's not calculating right. Oh, that's why. I added some numbers in here. Where did it go? Oh, there we go. Okay. Okay. So 352 out of 386. That's the total number. Our hit rate right now is looking at 91.19% hit rate when you do add last month in there. I'll have all these numbers updated for you guys if you're in our Discord. If you're following us on Twitter, on Instagram, these will also be shared as soon as I get these updated for you guys. Give me a few days to get through there's like another 200 prints I gotta go through manually to double check if they went a bit higher. Max, did you get any news
significant news?
No significant news? Okay.
I think it's just, again, a lot of these can be linked to also, like, are they willing to lose that much money? And I think, like, sometimes it can be as simple as that to boil it down. But when we do see significant movements within it, typically you will see a news article linked somewhere. It could be a week late, it could be a day late, it could be an hour late, but there will always be something that kind of gives you like a heads up in a sense.
Yeah, definitely. Stacks AI. This is our baby. This is the tool that a lot of people go and they use this. A lot of people use it blindly. They just follow the prints. There's a few that, if it goes down, it goes against them. They go and they average down. But we've seen quite a bit of success in our Discord, a lot of success with our members that have put their trust into Stacks AI. Because, like Max said, A lot of these, they're spending millions and millions of dollars on a very highly unusual type of position. Stacks is always doing its best to listen in for us, to try to get an idea, put its ear to the door so that we get an idea of what possible returns they're looking for. And you can see a lot of these get some pretty high returns. So imagine you just got in for this last month. And again, you put in, let's just say you put in 10K, you're up 8K in terms of these positions if you're able to get yourself out at these highs. Now, I will point out, getting out and timing the highs, that's not your job. What you got to do is you got to have your own strategy of where you're comfortable taking those profits, taking a bit of that off the table. There are some people that say, once I hit 100% return on one of these, I take my initial investment off, I let the rest ride. But there are some people that say, you know what, once I hit 30 or 40%, I'm going to take my profits, I'm going to run, and I'm going to rotate it into the next possible Stacks AI position that comes in. I will also point out there are some of us where, for example, this LEU one, although it is a very nice return, very unlikely I would have played this one because it's 2.8K per contract. All right, so some of us are going to look at these Stacks AI prints like this one, Carvana, only 28%, but yeah, they're spending over 2K on that position. This CDNS one was 4.6K per position, and it's down on its highs are down 10%. So you have to remember everybody's going to use our Stacks AI tool a little bit differently. But you know, for example, Dylan, DM2 in our Stacks or in our Discord, his strategy, and he's testing something out where he's spending 10K, put that in a portfolio, and he's just following Stacks AI prints that he can, and anytime it hits 40%, it automatically sells for him. So there are ways where, again, Stacks, we like to say Stacks doesn't miss, or at least it rarely does miss when it comes down to it. But you have to have your own strategy set up for you, you know, to understand sooner or later you got to take your profits off the table, and you really have to understand that, you know, it is easy for you to see these 100% returns and to get greedy with it, but understanding that timing the top is extremely hard. And there's a saying when it comes down to options is you either sell before the top, right? You either sell and leave some money on the table, or you sell at a loss. So understand that timing that top is near impossible. That's not what you're trying to do. You're trying to make sure that you can maximize your profits as much as possible. Okay. But yeah, we've had some months really, like, look at this month back here in April. If you bought in when they were buying, so look at this. In April, we had 29 prints. 28 of them are wins at this point. Baba's the only one that's down right now. But 96% hit rate. On average, those ones are 180% returns. And that's all of these of them. We've got Broadcom, AMD. We've got some pretty big hitters. TSM, CORZ, Cores. I think this one went up even further, actually. Let me double check that one real quick. Here it's already at 352%. Yeah, dude, it's even higher. 4.1. Oh my god, okay, real quick. So I'll update this for you guys real quick, just so that when you see the updated version. 4.15 was the high as of today. So what I'll do in here is I'll go and I'll update it. 4.15. Oh, it's a 10xer. And I'll make sure it's highlighted with our Stacks blue right there. So you'll see, man, 49 days, and it's a 10x return, guys. Okay? Again, we do this to be 100% transparent for you guys. These are the prints that show up on Stacks. If you have Stacks, you can go in here. You can go ahead and compare them to our Stacks AI, every single one of these. You know, I take all this information, transport it into our spreadsheet so that I can go over this one by one for you guys. And yeah, it takes quite a bit of time. I'll tell you guys, it takes me hours just to go through all these. When it first started, yeah, maybe an hour to go through the prints that we have. There are quite a few now that have expired, so I don't necessarily have to go through. Those are all locked in at this point. But again, our numbers, as you guys can see, our numbers here, they're here to stay. We've got a lot of 100% hitters during certain months. You just got to be patient with it. There are a few months where things dropped off a little bit, but that's why it's a game of understanding your probabilities and your risk to reward. I would never take my full portfolio, throw it into a Stacks AI position, but if you're able to take a percentage of it and make sure that you have your stop losses and your take profits set, I would say it's hard to see if how anybody using Stacks AI at this point would be looking at a red portfolio. All right.
Yeah.
Okay. I hope you guys enjoyed this. I know today's live stream was a bit long. We're hitting almost 2 hours at this point, but that's what we want to do. We want to make sure that we go through this content, not only go over what we see in terms of our flow, but also discuss, for example, our stuff today for Stacks AI, being able to show you guys our process and to build a little bit more confidence in you guys and how we use our tools.
Yeah.
You got anything for us, Max?
No, I think we're good. It's been a slow week. It's 4th of July week, so it's expected. Next week will be a lot more busy. We got earnings season round 3 coming out here in the next week, 2 weeks or so. So be on the lookout for that. But other than that, be safe, trade safe, keep your stops tight, buy yourself time, and don't blindly follow trades just because someone on Twitter said to.
That's the dangerous one. For those of you guys that didn't get a chance to jump in on our 130 code, that is now expired. It was a month of stacks for $30, which is a 70% discount. But what we do have for you guys, if you are already in stacks or even if you are a new user, we've got this awesome code for you guys for July 4th. July 2025, that's JULY 2025. You can use that on Stacks for a 25% off your annual subscription. I would say don't miss out on this one. We'd only do these promos every so often, and again, it's your opportunity to get Stacks at a discount and for you to lock yourself in with these with an annual subscription. All right. That being said, this is Eric, eRoo here, and we've got Max, Unusual Trades or Trades and Gains. We will see you guys in the next live stream. If you really love this, hit the like button, hit subscribe, hit that notification bell, show us some love. We'll try to get on here a little bit more often instead of just Wednesday, especially as we get closer to these upcoming earnings season. All right. Have a great one, you guys. We'll talk to you guys soon.